Let's go over this trade in Wix.com. So this was a trade setup we posted back in December. This was a long call vertical spread. Just looking at a chart real quick, what looks like a long consolidation sideways. We were looking for a potential move out of this consolidation to the upside. So the trade idea was to get long an in the money call and sell an out of the money call. So this could be an in out spread, if you will. Long 260, selling a 300. So it's a 40-point wide call vertical spread with 121 days until expiration. So we wanted to give this one plenty of time because this is a fairly slow mover. And, you know, if this stock was going to move higher, we wanted to give it enough time for this trade to work out. We had about 20 delta in this trade, so we weren't taking on a whole lot of risk. If the stock was to move 1 point higher, we were going to make about $20, and if the stock was to move 1 point lower, we were going to lose about $20. So not a whole lot of risk initially, with plenty of time to go, looking for a break out of a consolidation towards the 300 level. And we can go and step through this trade day to day, but looking back, we have not done anything in this trade until, now we can go to the next adjustment. This is 51 days later, right? So between then and from where we started, we had a move lower, back up to about where we initiated the trade, another move lower. So the consolidation continued, and we were just sitting on the trade. It wasn't really doing anything. But because we had plenty of time until expiration, this was kind of working. I don't want to say it worked in our favor. It definitely did not work against us. So 51 days later, right, almost 2 months has gone by, and we were right at our break even. So at this point, we can bail on this trade, or if we're still looking for a breakout to the upside, we can continue to stay in this trade. What I decided to do was to sell a call spread to turn this into a broken wing called butterfly. And the idea was to sell a 300, 330 call spread that would do two things. One, we would give up some of our upside in exchange for less of a risk in this trade. So initial risk was about $1,600 or so, and we were able to reduce risk down to about $860 by selling an out of the money call spread, and we still had about 70 days left in this trade. We can go forward day by day, and not much was happening. Once we were kind of in this profit tent, right, we didn't care too much about which way the stock was going to move, as long as it wasn't to the downside. We had no risk on the upside, and the best case scenario for this trade is if the stock was trading somewhere inside of, let's call it 280 and about 320. Looking back at the chart, so we kind of getting this move that we were initially looking for, but it's a very slow mover, and therefore a slow move is actually working in our favor because we are long a 40-point wide call vertical that's appreciating in value, and we are short a 30 wide call vertical that's actually decaying, right? It's losing value as the time goes. So this was working in our favor. And we didn't do anything in this trade until, all right, this is what this trade looked like 62 days in, right? It's just kind of moving sideways. We go back to the chart and we see that even though the price is slightly higher from where we entered, it still hasn't really moved a whole lot. And we are inside of the profit tent, which means we don't really need to do anything. We just need to let the time pass so that we can burn off some of that premium that we sold in the 300, 330 call spread. And as we continue to step through day by day, the price continues. And now we're getting the move, right? So we had a big move around February 18th. We are outside of the profit tent, which is okay since we have no risk to the upside. We could potentially close out this trade here for a 30% return on risk, or we can continue to hold. We have 57 days to go here. We could continue to hold and see if the price would consolidate and maybe move back inside of the profit tent, or if it continues higher, we can potentially make further adjustments or just close out the trade for a profit. We continue to step day by day, and the price is now consolidating somewhere around 340. Right, so we saw a big move. This is the move that we were anticipating back here. Right, this was back in December. The move did not happen until about 2 months later. Right, so this is what this trade looks like. 68 days in, we had about just over a 1 standard deviation move to the upside. The trade is hanging around, showing about a 30% return on risk. I'm going to continue to push forward. So this is day by day. The price is now between, it was up to 360, came back down towards 335. So now we have two things working for us. One is that we have this 40-point wide call spread that continues to appreciate in value. We have the time working for us since we are theta positive. The 300, 330 call spread is actually now in the money, so that is not working for us. That's working against us. But our 40-point wide call vertical is helping offset the losses from the 300, 330. So net, we are in a good position. Our delta is nearly flat, so we don't really care, or we're not really affected too much whether the stock goes up or down. We're just kind of sitting and waiting for more time to come off the clock. And then maybe at some point in the future, right, this one is 50 days until expiration. Maybe at some point in the future, if the price comes back inside of the profit tent, this trade is going to be more profitable. And then if the price continues higher and as the time goes, that's where this trade is going to start to actually lose value. So we can go back and we can go forward, actually. We can go forward to about March 11th, right? So now we have 36 days to go. The trade is inside of the tent, right? So now we have the 300, 330, which is losing value, and we sold. We're short this call spread, so that's helping us. Our 260, 300 call spread is it's holding still, and if anything, it's probably gaining some value. So we have both spreads helping us. They're working in our favor. We are still nearly flat delta, so now we're positive 2 delta, which means we'll make or lose $2 for every 1 point move. We have positive theta, which means every day that goes by, we make a little bit more in this trade. We could continue to push forward. Now we are 89 days in this trade. We're right smack in the middle of the tent. The trade is showing about a 43% return on risk. Again, we have the short call spread decaying that's working for us. We have the long call spread that's appreciating in value, and that's helping us. We are positive theta. We are slightly positive delta, very neutral. We don't really care if the stock goes higher or if it goes too much lower. We just want to monitor to see if the price is still inside of the tent. We need to do nothing. Just let the time run off the clock a little bit more. We'll continue to push forward and we can go. So now we are 30 days out. I'm going to go forward another week. So now things are getting a little bit more interesting here. We're starting to pick up long delta on the way down. We're still showing about a 45% return on risk. And now we need to kind of make a decision here if we're going to do anything. We can close out the trade. We can also consider rolling up our 260 to 280, right? Creating this from a broken wing call butterfly to the upside. We could break a wing on the downside and actually introduce risk on the upside, but remove all of the risk on the downside. We didn't do anything here, just looking back on the chart. So we had a big push higher, and now we came back down, testing the level where the stock broke out from. So we're testing for support there, and we can go forward another week. So we did move outside of the profit area, and now intraday we're back in, right? So now we have a lot more positive delta, and that's something that we need to always monitor and to see if we are comfortable holding long delta, being long in this trade, which means that we'll make or lose about $37 for every 1 point move. And we could go forward another. We can go forward another week. Here's where we are now. We have 15 days to go. We're in this trade for 106 days. Essentially, the stock barely moved, right? We're up 0.27 standard deviations. Volatility hasn't really changed a whole lot, right? So we entered here. We made an adjustment here. Stock went higher, consolidated, came back down, retested the level where we made the adjustment. And now it's a little bit higher from where we made the adjustment. We're back inside of this tent. We're currently showing about an 80% return on risk. We still have no upside risk. All of the risk is on the downside. We are long about 20 delta. With 15 days to go, we need to start to think whether or not we want to continue to hold, because as the time starts to run towards expiration, the T+0 line, which is this green line here, will start to become more and more steep, both on the upside and on the downside. So the best case is that the stock will trade somewhere around 300 over the next couple of weeks. We can see what projected T+0 lines will look like. So this red line here is T+5. So that's next week. If we are at or around 300, we could potentially make more in this trade. And the gray line here is a T+10. So this is with about 5 days until expiration. So if we're somewhere around 300, we'll make more in this trade than where we are right now. However, if we do get a move to the downside, if we are outside about 280 in the next couple of weeks, we are now going to not only pick up a lot more long delta on the downside, but if we get a bigger move to the downside, if we move down to about 270, so we will give up some of the unrealized profit that we're holding right now. But then if we get an even bigger move down to about 260, right? This trade is now going to go from being profitable to about break even. And if the move to the downside is even greater, down to about 250, all right, which is about 40 points from where we are right now, this trade will go from a winning trade to a losing trade. I am not a big fan of holding these kind of trades all the way to expiration. What we can do here, consider, again, rolling the 260 up 10 points, making our wings in this butterfly equal, right? So we have 30-point wing on the downside and a 30-point wing on the upside. We will remove most of the risk, if not all of it, right? So we'll have no risk to the downside, we'll have no risk to the upside, and we can play for a potential pin of 300 over the next couple of weeks. If we're more bearish than bullish, then we can roll the 260 up to 280, right? So selling the 260, buying a 280. And then what we could also consider doing is rolling the 330, right? So we'll sell a 330 and we'll roll it down 10 points, right? We will move the 260. Let's see if I can. We'll move the 260 up to 280, and then we'll move the 330 to 320. Right, so now we'll have 20-point wing on the downside and a 20-point wing on the upside. We have not only we have no risk, we will lock in a profit of at least $600 in this trade. And we could potentially hold to see if we get a pin of 300 over the next couple of weeks. This is going to be a max profit, which is very unlikely or a very low probability of that happening. Somewhere between 280 and 300 will make a additional profit here. Same thing on the upside. Somewhere between 300 and 320 will make additional profit. We can't make any less than $600 in this trade. Or the easiest thing to do is to close out this trade. It's currently going for about a $20 credit, right? So if we're in it for $8.55 debit and we are selling it, so we spend $8.55. If we are selling it for a $20 credit, we are making $1,145 or about $11.45 profit on this trade. Now, one thing I wanted to point out is that a trade like this is not something that is unheard of. It did take a lot of time, right? It's 106 days until expiration. It also took quite a bit of holding it when it went up, when it came back down. So this trade did need to be monitored from day to day. It did need to be looked at every half hour, but it did need to be looked at least once a day just to see where we are and if we want to continue to stay in this trade. But the kind of patience that it took to put this trade on and monitor and hold it, you're going to get the kind of reward in exchange for the patience. So this is something very important. I know that everybody wants to put on the trade and make a 1,000% return like next week. And it could happen. But if you utilize the tools that we're giving you, and you can apply these tools to longer dated options, yes, the profits will come in a little bit slower, but you will have a lot less volatility in your P&L. And you can consistently trade these kind of strategies and make a decent profit.